Let's dig into a little bit more detail about financial accounting. But first, a quiz. Financial accounting. Are those reports directed to people outside the business, or are those reports directed to people inside the business? You're thinking, yeah, you got it. Financial accounting is directed towards people outside the business. So let's talk more about financial accounting. These are reports directed to outsiders. The key external users of financial accounting data are lenders and investors, the people who provide the capital to a business so that you can turn your dreams into reality. I need $100 billion. I'm going to have to borrow it, or I'm going to have to get new investors in my business. Those are the key users of financial accounting data. Without financial accounting data, it would be impossible for companies to raise money from strangers. The financial accounting data provide that environment of trust where lenders and investors feel comfortable giving money to an entrepreneur to start a business or expand a business. So what lenders want to know? Well, it's a loan going to be repaid. It's really that simple. Loan you a $100 million. Are you going to pay me back? And what data can I use to assess whether you're going to be able to pay me back? Well, tell me how much money you're making now. Tell me how much money you made for the last 3 years. I want to see that. That's going to help me forecast how much money you're going to make in the future. Tell me what existing obligations you already have. Because if you're already loaded up with obligations, I'm not sure I want to be one more person to loan you money I might not get paid back. Also, tell me what resources if you've got your assets. Tell me what those are, and all those things will help me assess whether you're going to be able to pay back a loan. Investors. What do investors want? And also investors, they're becoming your partners. They're now part owners in the company. They want to know, is this a profitable business? Have you made money the past few years? So they want to know the same thing that the lenders do. Because really this is a very important point. When you're an investor in the business, you're not buying the past of the business, you're buying the future of the business. How is it going to do in the future? So what you use the financial accounting reports for is to tell you the past so that you can use the information now to help you forecast better what's going to happen in the future, because the potential for the future is really what you're buying when you're an investor. Lenders and investors, the providers of financing to a business to turn dreams into reality. Those are the key external users of financial accounting data. Lenders, investors aren't the only external users of financial data. Lots of people, you and me for example, we use financial accounting data, or at least we do now. So who's some categories? Suppliers. If I'm going to sell to you on credit, then I want to know if you're going to be able to pay me. It's just like loaning somebody money. If you tell those people on credit, it's the same as loaning them money. You want to know if they're going to be able to pay you. So if you're considering entering into a long-term significant business relationship, or you're selling on credit to another company, the first thing you're going to do is get their financial statements. Have a little analysis done to see if they're going to be able to pay you back. So suppliers are important users of financial accounting data. Customers, anybody who enters into a long-term relationship with a business, wants to know if they're going to be around in the future. So if I'm going to be one of your customers and I'm going to start to rely on you, and maybe you're giving me a warranty. I remember when I used to live in Houston, there was a company that said, we'll build your foundation for your house and we'll guarantee it for 50 years. Okay, that's nice. Are you going to be around for 50 years before I buy into that warranty? I want to look at the financial parts of the company. Are they going to be here in 50 years? So customers, employees have long-term relationships with companies and employees. Too often they don't, but employees should look at the finance reports of a company. As a strong company, do they have a strong track record? Can I count on them because I'm going to give them my blood, sweat and tears? Are they going to be here in the long term? Are they financially viable competitors? This kind of the other side of it, because I provide these financial accounting data and they're available to people outside my company. It's often the case that my competitors get their hands on them. Do you think that Coke wants to see the financial accounting reports of Pepsi? Of course they do. Do you think that Walmart wants to see the financial accounting reports of Target? Of course they do, of course. They look at those things. So competitors want to see where your strengths are, where your weaknesses are. They can do that by looking at these financial accounting reports. Government agencies. There are some industries, banking industry, the insurance industry, the utilities industry, companies that sell natural gas, electricity, all of those are regulated by government agencies, so they have to provide financial accounting reports to the government agencies. In addition, sometimes in some industries, people in general want to know, hey, you're a health insurance company. Are you price gouging, or are you making profits that are too large? You're an oil and gas company, we're all paying a lot of money for gas at the pump. Are you making obscene profits? We want to see those financial reports so government agencies and people with interest in the public responsibility of companies, they'll look at the financial reports. Politicians are also looking at financial reports. If I want to make a political argument against, for example, the oil and gas industry and want to show that they're profiteering, I pull out, exudate their financial reports. Or if I am a politician who wants to protect, say, the textile industry in my state, I pull out the finance reports of some major textile businesses, show that their profits are going down. So politicians can make a political point using the financial statements of companies. And finally, the press. The press commonly use financial reports first. Just simple background information. If I'm writing a story about Apple, one ought to tell my readers, here's how much money Apple made last year. Here's how many assets they have. Here's how much cash they have in the bank. You can actually go into the details of their finance reports and find out where their income was generated. How much in the United States, how much in Europe. Yeah, I wouldn't want to use the finance reports for background, but also the press often use financial reports to trigger investigations. I'll give you an example. Let's say a company just announced that their profits have gone down by 70%. That's the financial accounting report. But that could trigger an investigation by an enterprising reporter who would say, well, why did their profits go down by 70%? So it's an investigation trigger. Lots of people use external financial accounting data and code. I hope from now on we could write your name right down at the bottom of this screen. Financial accounting is based on these three primary financial statements: the balance sheet and income statement. You've already seen. So let's talk about those. The balance sheet is the listing of a company's assets and its liabilities. Its economic resources, the assets, and its economic obligations, the liabilities. It's a basic financial report. The income statement. How much money did you make last year? How much money did you make last quarter? How much money have you made each year for the past 10 years? That's the income statement. That's also important information provided to people outside the company. The statement of cash flows. We haven't talked about yet, but it's the third primary financial statement, the statement of cash flows. My brother, who also teaches accounting just like I do, he would say, if you don't understand what the statement of cash flows is, say it slowly. The statement cash flow is the statement of cash flows. He's right. That's exactly what it is. It's a report of the cash that came into a company and reported the cash that went out of the company. Pretty basic thing, but we're going to find out soon that the statement of cash flows is an awesome piece of work. These three primary financial statements, the balance sheet and income statement, the statement of cash flows, they summarize the financial position and health of a company. Really, 3 sheets of paper summarize a lot of information about a company. That's financial accounting.